Well, welcome, team. It's been a year. Congratulations. This has been quite the journey. A lot of fun, a lot of challenges. But ultimately, I think that we're in a much better spot. We each had the opportunity to interview one of our executives over the last couple days here. I had the opportunity to interview Danny Popescu, our CEO and founder. Danny and I chatted about the vision of Harbourfront, kind of where it came from initially, some of the impetus to start it, and then where it's going over the next little while. It was a really interesting conversation. Erin, you had the opportunity to talk with our PM, Ian Goodman. What did you guys chat about?
Yeah, Ian and I had a really great conversation. We kind of came at it from the perspective of we've been here for a year. So what has the last year been for markets and the Watermark Private Portfolios, which is what Ian manages, which is one of the big reasons that we decided to join Harbourfront. So we talked a little bit about the last 12 months, 2022 as a whole, and sort of what we can expect to see rounding out the rest of 2023. So we had a great chat. And Mr. Adrian, you had a great opportunity to spend some time with Christine Tessier. So why don't you tell us a little bit about that?
That's right. Christine Tessier is our Chief Investment Officer. And we spend a lot of time talking about the structures and the processes at Harbourfront that make us uniquely able to offer our private market securities to a retail investor. There's a lot that goes on behind the scenes to be the only person that offers the products that we do in the way that we do to the Canadian market. And Christine was able to shed some light on those items. It was a very interesting chat. I hope you enjoy it.
Well, welcome, Danny. Thank you so much for taking the time today to have a little chat. For those of you who don't know, Danny is the CEO and founder of Harbourfront Wealth Management. I'm not going to dive too deeply into your background and bio there, Danny. I think most people that want to get into that, they just pop onto the Harbourfront website and take a look at that. But when it comes to Harbourfront, Danny started this company back in 2013 and has really turned this into an industry leader. So, Danny, going back to the beginning, what was the overall motivation for starting Harbourfront? And did you ever really envision it looking quite like this?
Sure, yeah, and thank you for having me, Trevor. My background started as I started as a bank teller in the industry, and then eventually I evolved in being a financial advisor like you are. And I did that for about 15 years till around 2013. And one of the things that I learned was that most Canadians, investors, simply can't stomach the volatility that traditional portfolios do, primarily being stocks and bonds. That's how most Canadians invest. And so I had a vision of creating more stability in the portfolios of retail clients. So I wanted to launch institutional type products such as private equity, private credit, private real estate, and bring that to the retail space in a unique way that would be more practical for retail clients. So that was the idea behind launching Harbourfront, is if we can build our own independent dealership, we can be innovative and launch the kind of products that the pension plans are doing. And as you know, most innovation tends to start with entrepreneurs and independent thinkers. And the banks, particularly in our industry, they tend not to innovate, but they eventually either copy or they purchase. So somebody had to do it, I guess. And that was the idea behind Harbourfront at that time.
Yeah, and in our team at Cherry Hill is celebrating its 1 year anniversary now, and the excitement is just so palatable, and it really feels like it's 10 years in, but it almost just feels like this company is just really getting going with its innovation and just really on that verge of disrupting the industry. Can you take us through some of the highlights and I mean, like, really high level, because I feel like there's been a lot, but can you take us through some of the heights that have happened in the last year or so?
Sure. Well, again, we continue to grow. We started the firm very small, and we're at 28 branches across Canada now. We've gone to roughly 300 employees, about 5 billion in assets. So there's all those milestones that we've seen over the last 12 months. In addition to that, as you know, we brought on a private equity partner last September, Audax Private Equity out of Boston. And the reason we did that is to really validate again our thesis and to show the industry that what we're doing is truly unique, and it makes sense for them to listen. and that worked, and we got a tremendous valuation for our company at that time. And despite that, we believe that we're roughly 1/4 of the way into our business plan. So our goal is to bring the firm to 15 plus $billion, and continue to bring on advisory teams, maybe get to about 100 advisory teams across Canada. So definitely lots of things that have happened in the last year. I guess the other thing to add is, as we know, and again, this also validates our thesis, public markets have been very choppy, particularly last year. They've recovered somewhat this year, but yet a lot of our clients have done quite well because they've offset some of the volatility in the traditional asset classes with stable results from their private securities. We've been able to really create that comfort and that peace of mind for people, and I think we reduce the sleepless nights of a lot of our clients across Canada,
and for your advisors as well, because honestly, nothing has been harder in this job for me and for our team, quite frankly, than having those conversations and pick up the phone. When COVID started, calling every one of our clients and going through that, where what we saw last year with the clients that had moved over and got into our Watermark portfolio right away was that it was just a different conversation that we were having. So yes, it is about the clients ultimately, but it definitely helps us have just more pleasant conversations with our clients, which is absolutely fantastic. Danny, I know there's a lot going on. I know there's a lot of news that's going to be coming down. There was some recent announcements just the last day or so here. Is there anything on the horizon with Harbourfront in the months or years to come? I know you highlighted a little bit about some of the vision of where it's going to go size-wise and everything. Is there anything that you can actually highlight for us today?
Sure. Well, again, we're known to specialize in private securities. And right now, we've had tremendous traction in private equity, private credit, and private real estate. Our goal is to continue to increase the shelf of alternative asset classes. We're looking at an infrastructure fund right now. There's probably going to be a fixed income fund to take advantage of some of the opportunities in the fixed income space. So along with our CIO, Christine Tessier, we're constantly looking at adding new products to the shelf to again create more truer diversification and create more stability in client portfolios. So that is definitely on the horizon. And there's also just a bit of rinse repeat. So we want to get the word out there as much as possible. We anticipate growing significantly through advisor teams. We're looking at a few acquisitions right now to acquire some other dealerships. So never a dull moment.
So Danny, going back again a little bit, I was introduced to Harbourfront back in 2018. And as we were looking to make the move, we interviewed and went through an intense due diligence process with several high-end firms. We saw immense value in Harbourfront and what it has to offer the clients and the advisors. But can you share some of the things that differentiate Harbourfront from the competition for both clients and advisors?
Sure. First of all, I would agree with you. I think there are a lot of great firms here in Canada, and there are some good people behind these firms. And a lot of these folks are very well intentioned, and they want to do what's best for their clients. And sometimes, it's just a matter of having that next idea. And people always ask us, well, why are you the only firm? Why are you the firm that launched the first, multi-manager, multi-strategy private credit pool? And the reason for it is there's always a first. And I give the analogy of an iPhone. The iPhone was the first touchscreen phone. Apple came up with that phone, and then other companies followed thereafter. And in our industry, if you look, I believe BlackRock invented the first ETF, and now there are many providers. Franklin Templeton started the first mutual fund in Canada, I believe, and now there are many others. So there has to be a first. So I think the innovation is extremely important, and we're ahead of the curve. One of the things that we're seeing in Canada, unfortunately, unlike the US, is the followers, tend to follow quite slowly because our industry is dominated by bank-owned investment dealers. The banks tend to move quite slowly, so that is a little bit of an unfortunate phenomenon. So the adoption of these types of things for Canadians as a whole is slower than I like to see. But I think that's one of our big differentiators again. And the second is that we really provide the opportunity to our advisors to be truly entrepreneurial. It's open architecture. They can do whatever it is that they want for their clients. There's no push to sell any proprietary products or anything to that effect. All the pools that we run, they're all sub-advised by third-party investment managers. So that objectivity, I think, is really important. We also give our advisors the ability to be partners in the firm. So by being an advisor-owned firm, our advisors who are client-facing, who know what the clients need better than the executive team, they have a seat at the table. They attend the AGM, they attend the various meetings, and they're able to shape and influence the direction of the company. That is quite rare in Canada, where again most decisions are made top down at most large conglomerates. So like you said earlier, I think this really helps advisors and it very much helps clients. So those would be our key differentiators. On top of that, obviously, we have really strong technology, which helps the advisors, which also trickles down to clients. So we do our very best to make the lives of our advisors as easy as possible. We're here to support, rather than get in the way of advisors. And again, at some of the large conglomerates, there are some advisors that are somewhat disenchanted, given that things are just very slow to move. There's too much red tape, and there's a feeling that they're a number, as are their clients, which is why you're seeing this big exodus from these big corporations moving to the independent world. And there's over 100 independent dealers out there right now. So we're not the only one, but as you say, we're doing something a little bit different rather than just looking to offer the same type of securities.
Yeah, definitely sounds like kind of where we're coming from. I never really looked at it as a number, but it was definitely, there was an us versus them kind of
Sure.
faction there. Whereas here, there's been a few things that we just wanted to change a little bit differently, that we had some different ideas. And we've had your ear, we've had our CFO's ear, and most of those, when they make sense, we've been able to implement them, which is significantly different than what we experienced before. So Danny, I just want to thank you so much for your time today and just sharing a bit about Harbourfront's story and its journey. I haven't been this excited, and I can honestly say our team hasn't been this excited in a very long time about the company that we partnered with, the work that we're able to do. It's really exciting. We go to work with a smile on our face every day, which is again a stark contrast to what we've seen before. Before I let you go, any final thoughts you'd like to leave with us today? I think we've covered a lot, but is there anything else that you want to leave us with?
I mean, the only thing I can say is, your financial well-being tends to be so important for human beings. So I truly believe that what we're doing is very special, and it goes beyond money. There's a lot of financial stress that comes from money. So if you can reduce that stress for your clients, I think you're doing far more than just building wealth for them. So that's really what we're aiming for here, is to create stability. We recognize that most people aren't looking for a 12 to 15% return with a lot of volatility. So I'm also very excited and humbled to partner with teams like yours. So yes, looking forward to many years of continued success.
Us too. Thank you so much.
You're most welcome. Thank you, Trevor.
Perfect. Well, Ian, thank you so much for joining me today. Ian's one of our portfolio managers on the Watermark Private Portfolios. So we're just finishing up our first year here at Harbourfront, and we just wanted to dive into what's gone on the market since we joined from our previous firm, and maybe give us a little bit of an insight as to what we might expect over the next little while.
Sure. It's been, the past year, well, not, 2022 was a little bit of a rough year in the markets, probably actually one of the worst years for bonds and stocks combined, due to inflation. Inflation came in, as we know, pretty high, and I think we're still seeing the effects of it, especially in food. And for us Canadians, I'm not sure about you guys in the East, but us here out here in the West, we're still seeing some pretty high gas prices. So it seems like it's a bit sticky and not coming down, and that resulted in bonds last year, taking a big hit, and stocks too. So most portfolios in Canada were down 12 to 15% or more.
So what do you think that we should be seeing? I've definitely seen some altering opinions on how the rest of 2023 is going to go. It feels like it's been shifting, this more recent interest rate hike that really I didn't see a lot of people see coming. What are your thoughts on the rest of this year? What do you see coming down the pipe?
I still think it's still a tough investment environment. As you just mentioned, the Bank of Canada raised interest rates. So on one hand, we still have sticky inflation, in my opinion, but on the other hand, the job market's been pretty resilient, which is probably why the Bank of Canada raised interest rates. So with interest rates, staying up here at 5%, that obviously has some impact on consumers, and we feel that impact probably hasn't fully, made its way into markets yet or into the economy. People who've had variable rate mortgages are they're gonna start feeling that pain soon. Most car loans of interest rates have gone up, so we feel like the impact of those rates has not yet been felt, and likely is ahead of us.
Okay.
And for those familiar with the Canadian stock market, the Toronto or the TSX Composite Index, it's only up 2.5% year to date, and I think this month it's actually been down 1.5% or roughly around there, and that probably is reflective of the interest rate hike, and what the market is probably pricing in for Canada.
And you would normally see you would expect to see a bit more of a robust rebound, especially after what 2022 looked like, historically speaking, right? So is this a bit unknown territory, or how can you comment
Yeah,
on
I think a little bit is. I mean, some people point, some well-known world renowned economists are pointing like similar to 2008, but it's probably not like, I don't quite think it's like that. I mean, we're still coming out of COVID. People still want to spend money. It's just how long will they have that the ability to do that if interest rates stay high?
Right. Interesting.
So on one hand, that's keeping the market afloat. On the other hand, typically when these rate hike cycles occur, it's usually 12 to 18 months before we feel the impact. Kind of just ratchets it up, and then it gets to a point where it sort of is a larger impact on consumers. And we're probably we're about 13, 14 months in since that cycle began, so we're probably getting close to where the some pain's going to be coming.
Right. So if we shift focus a little bit, and talk about your world that you manage, can you tell us a little bit about the Watermark Private Portfolios discretionary versus the regular funds accounts? Our clients traditionally were much more familiar with mutual funds and how they work. So this is a new world for them. Can you speak to a little bit about that?
Sure, I mean, it's somewhat similar, except instead of having a couple mutual funds in your account, we build portfolios. So it's you have the individuals who run those mutual funds, so portfolio managers with extensive backgrounds, and then what we have is my team also has extensive backgrounds, similar education, and then we just have an extra overlay of building portfolios for you. So you get sort of an extra team on there, and then we can actually discretionary trade them right away. So if we don't like something in the market, we can just exit that position and get into a new position quite quickly. And with the speed of markets these days, that's I think a big advantage.
Okay. Has the Watermark Private Portfolios, have they mirrored sort of the pension plans and endowments in Tiger 21? Is there some similarities there that we weren't
Yeah,
seeing in
massive
mutual
similarity.
funds?
We've tried to build our program or the investment philosophy around endowments and pension funds, as these individuals are, we've looked over the last 40 years and going, why are these people, why are they doing so well with their investments versus retail clients, which we service, having much more volatile portfolios. So we did the research, we looked at what they were doing, and they have access to investments that typical, smaller retail clients just don't have. So what we try to do as a firm at Harbourfront, and then, give access to those investment vehicles, we've made the Watermark Private Portfolio. So anyways, what we found was that they have access to, a lot of private companies and private investments, which have a much better investment profile.
Okay. And that sort of leads into my next question is, so why is Harbourfront different from other investment firms in Canada, and what makes the WPP truly unique? Is that the privates that you're speaking to?
Yeah, I believe that's the big differentiator, and probably over the next 5 to 10 years, you'll see other firms move in our direction. But we're sort of the first mover, leader in Canada in that regards. And again, like, instead of watching your, I don't know, TD Bank trade on the stock exchange up and down every day, sometimes, like, who knows why it's going up and who knows why it's going down. Yeah, but it does. These private companies are, much less volatile. If they can't invest in something, or they don't have an investment, then they'll just close their doors for investing, and they'll just run with what they have, and it just, again, it just a much smoother ride from an investment perspective.
And we spoke initially about how public markets and the bond portfolios and the bond markets did in 2022. How did the Watermark portfolios fare over the same period of time?
So our balanced mandate, which is, our typical investment, most of our clients are in a balanced portfolio. It ended up the year, I think it was 1.5%. It finished positive. And yeah, it was a pretty good year, when you compare it to, bonds and equities down 12, 15, 20 plus. But again, those private investments just held in there. So, we carve out 20% of our portfolios for private real estate. And with inflation persisting, and rents were increasing last year. They're still increasing in Canada. People just can't afford homes. Mortgage rates are high, so that allows for a steady income stream for our clients, and that really helped. And then on the other side, instead of being in bonds, you're in private credit. So private lenders across Canada who have done this for years, they lend their money, and they're able to just obtain a little bit higher interest rates, especially with what was going on in the market last year, and banks, sort of restricting their lending. So it just offers those types of investments more opportunity.
Awesome. Well, this has been great. Just to round out our chat, is there anything that you're watching right now? Anything that we should be keeping an eye on, to be aware of?
Again, we're just kind of uncertain about the economy with higher interest rates and how that plays out. Historically, it's not been, it's been 18-month lag, and then markets are sort of not, I don't want to say frighten anybody, but things sort of tend to go poorly, i.e., like, consumers can't afford with the higher interest rates, they can't afford to take on new loans. Instead of maybe going to get a new car, they're going to say, okay, I'm going to hold this car for extra amount of a couple of years. Maybe instead of getting a line of credit on their house, they're not going to do that. So it just sort of restricts the economy and slows down the economy. Right. So that's what we're expecting. And then on the flip side, we've seen AI, or the mega cap tech companies just take off, and while it's exciting, the valuations on those companies are getting pretty high. So
Yeah.
We're watching those, see if they pull back, and maybe we can get in, but we don't want to chase those things higher right now.
Oh, awesome. Well, thank you. I really appreciate your time today, and thank you for helping us celebrate our 1 year at Harbourfront.
Yeah, congrats, and it's great to have you aboard, and you've been a great addition to our company.
Oh, awesome. Thanks, Ian.
Christine,
Hello.
thank you for joining me.
Hi, Adrian.
Christine is the Chief Investment Officer at Harbourfront. Welcome. Firstly, welcome to Harbourfront. I know you're new to the firm, and so I wanted to say welcome aboard.
Thank you very much. I'm excited to be here.
Awesome. I wanted to ask you first, I know you had a great gig at your previous role. You obviously came here to Harbourfront with some intention. Could you give us a real quick idea of what it was about Harbourfront that brought you here and now?
Sure. Well, that's an interesting question, Adrian. So just to go back, my previous gig, I was Chief Investment Officer at Foresters Financial, which is an insurance company. And prior to that, I'd worked a long time in the pension industry. I also oversaw Foresters Pension. And I was noticing kind of two things in the marketplace that were really pushing me, one, to think about retail and eventually to think about Harbourfront. The first one has to do with really structural change in the industry. And when you think about the individual, we have three kind of savings vehicles available to us, government provided, companies and corporate, pension savings vehicles, and then our personal savings. And after having worked a long time in, corporate organized savings vehicles, pensions, and others, I can see that the pressures on that area are increasing, and that more and more individuals will have to think about their own financial future. And so this got me interested in contributing my skill set to the retail side. Now, why Harbourfront? I would say, you look at different business models as to how to tackle, you know, um, you know, creating investment products for individuals that are robust and safe. And I think that I'm a big believer in active advice giving and hand in glove servicing for the end client. And so Harbourfront brings these two kind of concepts together for me, tackling, everyday people and bringing really turnkey solutions.
Perfect. Okay, fantastic. That sounds like the same reasons I joined, so that's great to hear. Can you give us a bit of a flavor of the opportunity that you are here to develop? Like, you're Chief Investment Officer, but what does that mean? What are you going to do?
Sure. Well, more specifically, I think one of the things that I see Harbourfront doing that puts it right at the forefront in terms of offering opportunity is trying to bring private products into the retail space. Private products are very well-known products in the pension landscape. Institutions have been using these for decades, but they're relatively unused in the retail space. So I have a 25-year career researching products that I could never even personally access, except through very indirect means. And so the opportunity that I see with Harbourfront is one really a leading identification of that opportunity set and, a thoughtful manner in which to package it. Privates on their own do not receive the due diligence that public securities receive. And so it's important to pair private market investing with internal due diligence work. And I
Okay.
think Harbourfront is bringing pools together where the private securities are really diversified. But the opportunity going forward is obviously to take the foundation that's been built and expand the platform.
Okay, perfect. So we talk about our pension style asset management. If you read our website or any of our print
That's
materials
right.
or any of that kind of stuff, is it really just the inclusion of private securities? Is that what we mean by pension style asset management? Do you feel that there's more to it than that? And then if you could carry on with just what do the private markets actually offer to our clients that's different than what everybody else is offering out there?
Yeah, if I had to characterize pension style investing, what the words that immediately come to my mind are really governance, governance of the process, governance of the investments, and oversight of what is put in the portfolios, and finally, governance over how different investments are combined. So pension style asset management has a lot more to than simply, using privates. It's a lot about thinking about risk and how to combine different, investment tools. And so Harbourfront, yes, is bringing a very key toolkit to client portfolios in making privates accessible, and they are a front runner. We are a front runner in doing so. However, it's more than that. It's about building the internal governance around monitoring these securities, thinking about how to combine them, because of course, Harbourfront clients also benefit from public securities as well, and how to use them together.
Okay. All right. Perfect. Would you say your role then is kind of just improving what we already do, or is there something that's new that you've been brought here to implement as well?
Right. So I think that's a clear that's an important point that you're making, Adrian, is really the foundation has already been laid out. We at Harbourfront, the foundation of the firm really predates my hire, which is fairly recent. The private product suite was already initiated. I think I was hired to add resources, but there was already a great internal due diligence foundation in place. There are a team of portfolio managers managing the assets and reviewing them every day. We also use an external consultant on the assets to provide an independent vetting. I come in as an additional resource on broad-based oversight, really to expand the platform to introduce new strategies and securities. But part of the due diligence that I conducted on Harbourfront was really to confirm really the quality of the products here, and I've joined. So clearly, I'm quite impressed with what's here. Yeah.
And is that I've heard you mention before talking about, for example, infrastructure, not something that we do much on at the moment. Is that the kind of thing that when you talk about kind of the breadth and depth of what we do, is that something that you look at specifically? And is there anything you can talk to on that topic?
Sure. So currently on the private suite of products, which we refer to as AMPS, Accessible Multi-Manager Private Securities, we currently have three key pools. We have the Rockridge Private Debt Pool. We have Forsyth, which is our real estate pool. And finally, we have Laurier, which is a private equity pool. And what you'll notice when you look at these funds is that they're very broad-based. There are, however, new themes coming into the industry, which should be and made available to everyday Canadians. Infrastructure is certainly one of them, but there are other broader terms. So for example, impact investing, transition to green energy are other themes that kind of come up. They dovetail with infrastructure, they can dovetail with private equity. And so part of the work going forward is for us to examine our product platform and to see how to provide this diversification and these themes to our client base.
Fantastic. Christine, I think I'll pause it right there. Thank you so much for taking a couple of minutes to chat with us, and I appreciate
Absolutely.
it.
Thank you very much. Have a great day.
Well, thank you all for watching. This was really exciting for us. I hope you enjoyed it as well. If you have any questions, please reach out to any one of us, and we'd be happy to chat. Take care.
Thanks.
Thanks, everyone.